Good morning, this is Jack from Charting Markets, and this is the pre-market webinar for the morning of Thursday, the 22nd of January. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts, and I'm not here to shoot trading signals. This is a video for paying subscribers at chartingthemarkets.substack.com. It's published on YouTube after a delay of 24 hours. All right, great. Let's have a look at ES. Now, ES, obviously, we had... Yesterday, Trump made depending on your perspective, either a phenomenal deal, which has given the US long-term prospects in Greenland, or he just got what he would have got asking anyway without all the threats of force. So personally, I'm leaning towards more the second camp, but either way, a deal has been made, and he's backed off from, and apparently he isn't going to start invading his closest allies. So we are where we are. So we're seeing a bit of a rally here. I've got more to say about this, but we haven't actually really broken up yet. In terms of, and I'm going to talk more about that on the daily charts here, but here we've got a little IHS here. It's quite nice. It's got a target, which is broken up with a target in the 7,003 area, and I think that's got a decent chance of making target. No current negative divergence. On NQ, we didn't have an IHS really. But we've broken up. We're testing the week pivot. We're back over the monthly pivot. We'll see. This is the only one of these where we haven't made a new all-time high this year. And it's lagging. And I'm going to be posting a chart. I'm finishing off a post, which I'm going to have out this morning. And I'm going to be showing that, and I'm going to be showing the NVIDIA chart, which both look kind of worrying, really. So anyway, RTY, given that so much of the US stock market performance was based on the Qs last year, it's kind of worrying that they have been lagging so much for really a couple of months now. In terms of RTY, we never actually had much of a retracement. We were forming a possible head and shoulders, then a possible level top, and then we're just going higher. So this has been by far the strongest. I'm going to be talking about this, and also this. I don't know whether it's right that that this is going up on the expectation that interest rates going down. If that is the case, then that's frankly a ridiculous argument. It's totally not out of touch with reality. I'll be talking about that on the post too. And showing why that is the case. Looking at YM, we had a double top breakdown with a target in the 4880 area. That's not entirely out of bounds at the moment, but if we see a move up today, we may just see a full rejection back up to the high, and then that will have failed, and we'll have a larger potential level top setup. It's a shame because they've had a really nice technical target, but that doesn't necessarily mean it makes target. We do have a possible weak 6-minute sell signal brewing here, but to be honest, it's so weak I haven't actually marked it in yet. We'll see. DAX, we're seeing a bit of a rally. We've retraced back up about 50% maybe. ESTX slightly more than that. No current negative divergence on either. All right, let's have a look at the bigger picture charts. Okay, let's have a look at SPX first. Now, the first thing to say is the rally yesterday back tested the daily middle band, but it didn't get over it. Now, obviously, if we are going to resume the uptrend, we're going to need to get back over and convert the daily middle band to support. And you can see on SPX here, this is a back test of it, but it's most definitely not a break. We need to see that break. We're going to break up a little over it at the open this morning, but the question is that going to follow through? I think my lean is it probably will. But I'm keeping an open mind until we see more evidence. In terms of the hourly chart, not a lot to see. We didn't have a buy signal at the bottom, but we did. All the positive divergence I was talking about yesterday morning on the 15-minute charts did play out. And to target. So RSI 5 buy signal on the 15-minute made target. And we made the possible near miss target, but close enough that I've called it as fully made on the 15 minutes. We had a head and shoulders here that made target pretty much, or at least very, very close to it. We did have an inverse head and shoulders, which is broken up. I've marked in the one on ES, but I haven't marked in the one on SPX. But it's similar sorts of targets, which are obviously significantly higher than this, but not quite back up at the all-time high. In terms of the Qs, again, we got down to 3SD lower band. I was murmuring that that's kind of an area where, we would normally see a bounce. We've seen that bounce. I think mainly because of the Greenland thing rather than than that. But we've come back and we're back over the 50 DMA, although only marginally over at the close yesterday, and we came back up and we tested the daily middle band. Again, that needs to deliver. That needs to deliver a breaking conversion to open up higher targets, which I would still like, because I would still like to see a retest of the all-time high at 63619, last made in October, and the missing piece really here more than anything else. So I'd quite like to see that retested, and this may be an opportunity to start serious work on that. On the hourly chart, we didn't have any meaningful divergence at the lows. On the 15-minute chart, we had a lot of positive divergence on the RSI 14, and that's now played out and made target. We will see how that goes. Looking at Dia. Now, Dia did break back over the daily middle band. This had gone down by less than the others in any case, and we have a decent prospect. As long as it goes up a bit, we're going to see a retest of the all-time high here. This is interesting because we actually have a really nice resistance trend line here. And it's a peach and a beautiful wedge from the April low. So if we do form a topping pattern, ideally Qs would retest the highs, and Dia would go a little higher, possibly overthrow this trend line here, but it wouldn't go enough up beyond it to break it hard. In terms of the hourly chart, we had positive divergence yesterday. That fixed and made target on the 15-minute chart, on the RSI 5, and the RSI 14 buy signal is fixed and is still fixed. It has not made the target yet, so I'm looking for more upside. In terms of the 15-minute divergences, which we had as well, 15-minute RSI 5 made target, and pretty much the RSI 14 has made target too, so I've called it. Nice looking double top here, which broke down. Doesn't mean it's going to make target, and if we go up much more, then, well, I think if we break back over the daily middle band on the Qs and SPX today, then I think chances are we're going to see a retest of the all-time highs on Dia, because they're really not far away. All right, let's have a look at the IWM chart. Okay, IWM on the daily didn't even get close to back testing the daily middle band. This really has been an awful lot stronger. Now, we had a lovely trend line here from the April low as well for wedge resistance, but we've gone through it. We've closed 3 days above it, which is more than I would normally see for an overthrow. I'm leaning towards this heading up to one of these other two possible trend lines that I've marked in. It doesn't necessarily have to be one of these trend lines. It just often would be. So I'm watching these. I'm expecting this to go higher. And I've got this resistance trend line here in about the 272, 272.5 area, and I think that's the next target area. I'm thinking that will be reached. One thing that's different though is we have got possible RSI 14 and RSI 5 sell signals spraying. We might well lose the RSI 14 one if we have a strong day today, but we're probably going to hold on to the RSI 5 one. So I'm thinking that could last through into a reversal on topping patterns that we could form in the next few days. Looking at the hourly chart, we got an RSI 14 sell signal fixed. We didn't have any positive divergence on either hourly or 15-minute. If we had, they'd have made target. As we didn't, then they haven't. I've got a target up here as well, and that is the nicest and very nice resistance trend line here for the rising wedge from the November low. I've got a target for that, which is currently at about the 270.5 area. That's the next obvious area and a possible level of resistance if we reach it. Okay, DAX. DAX hasn't broken back above the daily middle band here, but I think there's a good chance it's going to. Nikkei never made it down to the daily middle band and looks ready for a high retest. Neither of these look as though they've got any kind of larger reversal pattern forming. Can easily make new highs, and if we just retest the highs, you can set up some nice looking short-term double tops. All right, let's have a look at the more worrying areas of the market, which are the dollar and bonds. Okay, dollar, this may well be a bear flag. We've got an open target down here in the 97.53 area, 90 to 97.61 area. I was thinking we could see a hard reversal here, but we haven't really seen that. And one thing I'd like to just mention in passing is that obviously one of the dangers of invading Greenland was that basically European ex-NATO allies, who at that stage technically would be at war with the US, would be dumping their US treasuries and equities. And actually, in total, I've been reading numbers that, I think the Europeans have got about $3.5 trillion of including the UK, and about 3.5 trillion of US Treasuries, which is a lot. The crisis which ended the tariff bump last year was apparently about someone selling about 200 billion worth, so about 15 times that. But also, they own another $12 million of US securities. Start selling that down, as one Danish bank was doing yesterday. That could have a big impact on both the equity markets and very much on the debt markets. And equally, it could seriously undermine the status of the US dollar as the world's reserve currency, which is a big reason why the government is not already in trouble over its spending plans. And actually, I've got an illustration of that. I think I'll just stick these up. I was taking these this morning, but hang on a second. Right, I've got two things to show you here, which are wait a second. All right, there's three charts. This is one I'm using in my post today. And this is actually since the Fed, yields and Fed funds rates since the Fed started cutting rates in September 2023. And you can see the Fed funds rate's gone down 1.5% and yields gone up. I was writing about this in November 24. The problem is the yields are mainly about what the market expectations are of the creditworthiness of the US, and without any kind of a plan, which to keep the debt down and have some sort of plan for repaying it at some stage, that doesn't inspire a lot of confidence. Right here, European countries hold nearly 40% of foreign US treasuries, and this lays them out. This is a nice visual. I knew all this already, but it's a lot more friendly on the eyes than what I was looking at. Obviously, you've got other people. If in the event that a move against the US dollar got started seriously, of course, you've got some big other players who could sell: Japan, China. Taiwan would probably hang on and to show loyalty. South Korea, but but the main thing is, of course, you've got basically 3.6 billion from Europe, and we've got 472 from Canada, which is likely act with Europe. Cayman Islands, that's likely actually effectively US holdings being held offshore. But that is a significant vulnerability. The other thing I wanted to show you was what's happening on the yen at the moment. And that is a thing which very much needs to be borne in mind at the moment, because this is a demonstration of what can happen to you when you are not the reserve currency, which of course the Japanese aren't. Now, you've probably seen a couple of references that Japanese yields have been going up a lot over recent days. And hang on, I'm looking for this chart, and I have it here. Oh, here it is. Got it. Right, this is basically what's happened here. The context here is you've probably been seeing things on Twitter saying that bond yields, 30-year bond yields have gone up to 40% or so. But the context of that is that the government's got big plans and tax cuts, and of course an awful lot of, I think something like a third of their budget is actually funded by borrowing, which actually pretty similar to the United States at the moment. And what's been happening is, what happens in countries that aren't the reserve currency is that the bond market tends to punish this by selling off bonds and upping yields. Now, when I'm talking about if there's a crisis of confidence, bond yields in the US could go up to 9%. This is the kind of thing I'm talking about, and this isn't the only one. This happened to Liz Truss, who is a newly elected Prime Minister of Britain, and she put forward fairly wild spending plans with no real basis for ever being paid back, and basically bonds got punished. And this is what you're seeing on Japanese here. This could happen in the US, and without the protection of being the reserve currency, it would happen in the US, because this is what happens everywhere else, even big economies. But none of these have the status of reserve currency. Dollar loses that, and the US has got big problems, and would need to come up with some kind of plan for sustainable spending and sustainable borrowing, which at the moment there's not even the ghost of a plan. So we'll see. But here, I'm thinking this might well be a rally, and we can continue the downside. Not seeing a lot else on the others to suggest otherwise. On the euro, this might actually turn out to be a big bull flag if we do that. GBP USD is pretty neutral. We've got a double top that's broken down but might be failing. USD JPY kind of looks like it wants to retest this high, but there's no pattern there. USD CAD, we had a double top that broke down, but that's already made target. Australian dollar and NZ are going up pretty seriously, both of them, which is weekly dollar negative, but only weekly because they're not actually really a meaningful part of the US dollar basket. Looking at ZB, ZB, we've seen a breakdown. And the thing is, on ZB, we've got large patterns pointing down on bonds already. We've got a large head and shoulders broken down with a target in the 112.04 area on ZB. We've got a large double top, which is broken down on ZN with a target in the 110.17 to 110.12 area. And both of these look within range, and both of them existing patterns. And these might just be counter trend rallies that we're seeing here. I'm thinking the downtrends may well resume. I'm thinking that wouldn't necessarily drag equities down with it, but it might. So that's something to bear in mind. Okay, moving on to the oils. We had a head and shoulders which broke up. Sorry, it broke down and failed. We've got a double bottom that's broken up and actually could be failing too. This might just mean that we're basically consolidating sideways. On HO, we've seen a very strong run up. 60-minute sell signal has now reached the possible near miss target. I did think that was going to fail, but it never quite failed, and that's now basically pretty much made target. This has been the strongest, not quite sure why, but we've seen very big moves up in both heating oil and natural gas this week, and it seems unlikely that that correlation is an accident. RBOB managed to retest this high, which CL hasn't, and we will see how that develops from here, but I'm thinking we could have a double top here. In terms of NG, wow, what a move. This entire move down from the early December high, basically coming down from 5 to 3, dropped 40%, and it made it all back and more in 3 days. Wow! Only on natural gas would you see this kind of a move. Really, you need something else delivering this kind of move would need to probably be a crypto. So not quite sure why this has happened, but it has happened. And now that it has happened, I do have open targets up slightly over 6, and I'm wondering if those will get hit in the next few days. Looking at GC. Gone higher, retracing a little. SI, possible double top here as we find resistance in the 95 area. Palladium, still hasn't made this IHS target in the 2010 area. And really, this is a little odd because pretty much all the other targets have been made. And actually, platinum, the target has been made as well. Now, actually, my charts have been a little iffy on their data in recent days, and when I drew this chart originally, drew these arrows, this target was higher, so I've left that on just to remind me that there is a potential higher target there. But it's already made the first target, which was the retest of the December high, although obviously what that means is this showing the December high is now lower than it was showing at the time I drew this arrow. So we will see, but technically that's now made target. HG, lovely looking double top here. It's really, really, really nice, and it's testing support now. I'm thinking that may well break down and make target. That target, if seen, would be down in about the 5.25 area. Okay, looking at KC, leaning towards seeing a retest this low. Haven't quite seen it yet. Coffee, well, as I said, coffee and cocoa may well just be doing reversions to the mean because they went and traded a long way out of their comfort zones. Sugar still looks like a bear flag forming. Cocoa has gone lower and could go lower still. Cotton, maybe a bull flag forming. Wondering about that. I think that's the obvious read because, of course, you've got a nice looking double bottom, which is broken up with the target in the 66.8 to 67 area. Lumber, we've got a 6-minute sell signal fixed. That's not been delivering much to the downside, and we've got open targets above. Double bottom target in the 643 to 2.25 to 646.5 range. ZW, This really looks as though the double bottom is failing, and the next obvious target would be a retest of this low here in about the 501 area. On corn, this looks like a bear flag which is starting to break down, might expand into a larger bear flag, but I think bigger picture we're likely to be in due course seeing a retest of this low here in the 417 area. Looking at soy, nice looking double bottom. It's now testing resistance. We've got a possible weak 6-minute sell signal brewing, but it wouldn't require much of a move to kill that divergence. ZL has gone higher again. Not really been trading with soy recently. Back above the November and December highs. Not seeing anything compelling saying it's about to turn. Live cattle, nice looking wedge, nice looking double tops, broken down. Not really delivered anything, but I'm thinking that might make target and possibly deliver a test of the monthly pivot at 22708. On HE, not seeing anything compelling, saying this is about to turn. We've got a weak 6-minute sell signal fix, and as soon as we retest this high after what looks like a bullish triangle breaks up, as soon as we retest this high, we'll have a possible full 60-minute sell signal brewing, which might then deliver something later. In the meantime, I've got a possible trendline target up here in about the 96.875 area. Okay, great. Let's have a quick look at questions, of which we have none. All right, everyone take care. Should be an interesting day, and I'll catch you guys tomorrow. Cheers.